Good morning, everyone, and welcome to the Place Your Trades Network. I'm Anthony Crudele, and today I'm going to discuss easing your way back into the week after a holiday weekend and why I think that this week is really all about the dollar. I'm going to go over some technicals in S&P. I'm going to talk a little bit about copper today. You don't hear me talk about copper a lot, but in Shy Girl's blog this weekend, she talked about something that's, I think, really important to watch this week for copper. So I'll go over the chart for that. And we'll probably dip in and look a little bit in NASDAQ and all of that. And I know it's a Monday morning after the weekend of Thanksgiving. And I'm definitely going to start off talking about how I ease my way back into the week because I think it's so important to get back into rhythm, get back into sync when you're coming off of a few days. Because I don't know about you, this morning I woke up, I felt fresh, but really still just a little tired, a little lag. Could be all the food and a little bit of wine that I had this weekend. So remember, everybody, today's podcast is brought to you by Tradeovate, which has built a custom app dedicated to trading event contracts. This is what we're all using at Place Your Trades. I'm going to show you guys some of the trades that I'll be taking today in event contracts. There's a link in the chat if you want to go and check out the app. I'll show you guys in just a moment here on how we actually go and get the app from placeyourtrades.com. Go there, put your email in, click get the app, and it's for free. You can start checking out event contracts, see if you're interested in them. We all really love them here at Place Your Trades. Obviously, we talk about them all the time. But it really is, I think, especially for a day like today, as I'm trying to get myself back in the game, it's a great way to get access to trading futures contracts. Now, the Place Your Trades Network is live Monday through Friday from 9 to 9:30. So make sure you subscribe to our channel and set your reminder and notification so you never miss a podcast. We really appreciate it if you do that. And if you would like the episode, I mean, this week, tomorrow we've got Julia Cordova, well, Michael Gad. Michael Gad and I actually did a spaces this weekend, which was really, really great. So thankful of him inviting me. We did it on Saturday. We had a great amount of people watching that. He's a great guy. So he's on with Julia tomorrow. We've got OG on this weekend on Wednesday with David Yoakum. Hopefully I said his name right. I think I did. And we've got Pony with Ryan Rosbiati. I'm really getting challenged with all the names this morning. I'm pretty sure I got that one right. And then we have Shy Girl Spaces this week. That's going to be big. I think she's got global oil risks. She's got another energy guy, and then Bob Iacchino, known Bob for a lot of years. That'll be a great spaces. And then you've got Penny and Pax on Friday. And then this Wednesday on our YouTube channel is going to be Morad, Canny, me, and Brian Shannon. So make sure you subscribe to the channel because we got a big week on our YouTube channel for Place Your Trades for Futures Radio Show this week. So the first thing I really want to discuss is easing your way back in to a week. Now, a couple things I want to talk about here because I think it's extremely important when it comes to trading psychology. When you come off of a holiday weekend, right? Your body actually finally like fully relaxes. Like even this morning, like I said, I woke up, I felt fresh, but you're just not as sharp. At least for me, I was off Wednesday, Thursday, Friday, at family in town, all these different things going on, right? And your body's just running and racing, but you're not thinking about trading. And your body actually starts to fully relax. And what happens is you come in on a Monday morning as a trader, and all of you know this after maybe you've taken a vacation or after a holiday weekend, you come in, you feel good, you're excited to be back, and then you sit down at the screen and you're just not as sharp. You're not in rhythm. And I think it's so important, especially coming in on that Monday morning, is to just spend a little bit of time watching and just find your way back in sync. Most people want to click a button right away and they want to try to find their way getting in sync by clicking buttons. To me, it's always been a massive mistake. And one thing that I've learned on these Monday mornings coming off of a holiday weekend, and the reason why a lot of, if you go back and if you remember, or notice a lot of these Mondays, they'll be one dimensional days. And the inclination that most traders have is they want to fade that first move in the morning, right? They want to come in and the market starts to go, and you're like, oh, all of a sudden, well, you know what? It's already come so far. It's coming off a holiday weekend, or you just find some reasons as to why you potentially want to fade this move. And then you come in and fade it, and then the moves end up being extended. So I've noticed that a lot in my experience as a trader is that these Monday mornings, they a lot of times can be one dimensional, even for not necessarily coming off of holiday weekends, but just Mondays in general. So it's something very important to watch that you don't step in and you want to fade something right away unless you have a lot of confirmation. Because, like I said, a lot of times these Monday mornings could be one dimensional. I see a lot of you in chat. My man, JB, across the pond. Miss you, my friend. I haven't been in London in a few years now. Anissa, you're always in there. Good morning, Anne Marie, Penny, Flary. What's up, everybody? Hopefully, you guys all had a great weekend. Let me know if you had a good weekend, or give me some of your thoughts here in the chat. I'm always following them along. Now, what I want to do next is I want to actually go over to, I want to share my screen. I'm going to get into some charts and do a couple things. First off, actually, I'm going to take you guys to the Place Your Trades website just so you know this is how you would do it and go and get the Trade app. You go in there, pop your email in, it'll say get app, it'll take you to this screen. You sign up for event contracts right there. Like I said, this is Trade web app. It's what we all use. We really like it. Highly recommend you go and check it out. And I'll show you guys what that app looks like in a little bit. But now I want to get into, so Shy Girl does a blog every weekend on Sunday. It's on placeyourtrades.com. You go in, all you got to do is put your email in. We're not spamming you or nothing. Just go in there, put your email in, and you can read it. And we all know that Shy Girl's known a lot for energy. She's known a lot for, she does a lot of stuff on metals. And this week's report was great. It was actually my favorite one that she's done so far. And it also puts out, what's the economic calendar. It's just really a great one-stop shop out there. But there's something that's going on in the news that I think is extremely important. And this is why I'm going to go to copper. I actually highlighted this on the website. And Shai put out that mass protests have broken out in many cities in China this weekend against the extreme zero COVID measure. These protests could make the base metal markets extremely jittery. If Xi decides to crack down further or violence erupts between the government and citizens, we could see further downside in copper, right? And what is interesting to me is that this is obviously this is the main headline right now, and this is a market that I normally would not really trade too often, if ever. Is copper. I've probably traded it a handful of times in my 20 something plus year career, but I do think it's very sensitive to the news this week. And I pulled up the chart, and like I said, this is kind of where I'll tie in event contracts to this, because you have a headline right now, an event, right? These are the events that are happening, and then you have these event contracts, and this allows someone like myself, who's not normally participating in copper, to step in and look. And Shai put some levels in there, and I put up something that I like to look at very simply on a daily chart, which is, you have that orange line is the year to date from the opening of the year till now, is that auto anchored VWAP. It's just a volume weighted average price. It's a very simple tool. You can auto anchor it there. And then you have the 200-day moving average. And I didn't notice this until this weekend when I pulled up the chart, and it's a stone cold high of the move. And with this news going on in China, really makes me want to look to start taking a lot of the no's, which is basically being short. And when you come down here and you can look at copper and you click on the copper contract, so will it close above 360 or 365? I'm going to continue to watch this and look to take no's this week in copper. And that's a theme that allows me to participate in the bearishness of copper because of these news and headlines, versus me just stepping in and trading futures. I know Penny loves copper. So it's interesting to me because it's an event, and we have these event contracts, and it's a way for us to go in and participate in this market if we did choose to do so. And I think it's a lot better way than me stepping in and getting short copper futures on a Monday morning. Probably not the best idea for myself here, Anthony. So that's something I wanted to mention. And those are some of the great things you'll get out of Shy Girl's blog every week. It's fantastic. Now, next I want to talk about is the dollar. And this is the 200-day moving average. And I talked about this actually this weekend in the spaces. I think this is the most important piece of information this week. I mean, I know there's a lot of news and there's a lot of other things going on, but what the dollar is doing is everything. If you look at the dollar moves, it's what's moving everything else. Now, you could say that pretty much all the time about the dollar, right? But obviously this year, super sensitive to it. And I see these correlations working with and against it on a regular basis. And so now what I thought was extremely interesting is you see the 200-day moving average in the dollar right here. It's basically a double bottom as well, which could tell me that I think that the dollar is potentially done going down, right? I mean, this is a primary bull market. The trend is up, right? Primary trend is up. and you're coming back to this massive retracement into the dollar. And then right away, what I do is I go to look to see what are the other markets looking like that have been correlating against it. So you can see back here when the highs were made somewhere around in the end of September. And then I'm going to pull up the E-mini S&P. And what I always find so extremely interesting is when you have these opposite correlations, right? So the dollar's opposite correlation of what's happening with the S&P, right? So the S&P is this year the primary trend is down, the dollar trend is up. So then I look to see where are they on a relative basis with the exact same technicals, with the exact same chart. I don't change them, right? So then you go and you look and you could see we bottomed right around the end of September, beginning of October when the dollar topped, right? Not coincidence there. Now we go all the way back up. We rally back up and we're near this auto anchored VWAP, which is around 40.90. And then you have 40.56 is the 200-day moving average. Now it looks like we almost have a double top at the 200-day moving average. Let's quickly go back to the dollar, right? It's the exact opposite move. I don't have an auto anchored VWAP here because this is the Dixie. So this is the cash market. So when you look at this, you're like, wow, that coincided and the chart looks exactly the same. So now today, what I'll look for is if that dollar continues to be pushed higher, only want to look at shorts in S&P. This kind of feeds into what I said earlier, right? You could have a one-dimensional type day, especially when you come off of the weekend. It's a Monday, and then you also have a double top potentially, and you have a double bottom in a correlating market. And I think it's extremely interesting because to me, this could set up, which I think I discussed a little bit about this in this weekend in the spaces, is that I think that everyone's getting way too bullish. I mean, think about this. I mean, put this in chat. I'm curious what you guys think. Have you ever seen a bear market end without capitulation, right? And have you ever seen a bear market towards the end of a year come all the way back? I'm curious to hear what you guys think in chat because let's face it, it doesn't really happen. In my experience, never happened. I've traded through several bear markets. You never see a market that's in a bear market without any capitulation come all the way back, and very, very rarely have I ever seen a bear market at the end of the year turn all the way around. It usually happens in the quarter of the next year. So, look at the big part of trading is visualization, right? A lot of times I'll have these ideas and dreams and I would think about how the market's working, right? And it's I have to obviously wait for the strategy to tell me what I think, what I should actually do. But I remember in history and in the past what's happened in bear markets. And to me, they never end this way, right? They could end with long consolidations. If you remember at the end of 2001, 2002, 2003, those years were brutally tough. Probably many of you weren't even trading then. Um, I was, and it was not easy. And it was just a long consolidation after multiple capitulations after 9/11. And then you have 2008. Remember, if you remember, we really didn't start to bottom until the end, until I think it was around the first quarter of 2009. That was another challenging time. And you look at it, but you go back and look at how these bear markets ended. Even the COVID one, let's goes without saying that it ended with capitulation, right? So this bear market, I don't know that I would call that capitulation. It could potentially be, maybe not as strong as we wanted, but I just think that this time right now, I'm just really looking at the S&P saying very hard to want to be a buyer. I'm almost only looking at shorts right now because of one quick glance again, dollar potential double bottom, S&P potential double top, both at the 200-day moving average at the same time. So then that brings me back to another simple way to do this. So like today, when we look at the S&P, and actually this morning, you go to follow Place Your Trades on Twitter. That's where Shy Girl will be hosting the spaces this Thursday. And of course, we'll give a bunch of other stuff, great stuff on there on Twitter. And we do a poll every morning, and it's a great sentiment check. Will the E-mini S&P close above 4,000? 64.3% say no. If you want to go and vote in that poll, I'd love to get more people voting in that poll every morning. And I look at it every morning to see what is sentiment. Funny enough, it's like, as a trader, a lot of times you're always like, well, more people are on this side or the other side. This poll is actually very accurate on what happens. A lot of times you look at it and say, I'd want to fade what most people think. That's the trader in us. But it's actually been very accurate. And you could just tell that people are bearish. Because once again, let's think about this, right? If you're bearish, that doesn't always mean that you're going to make money being short because a lot can happen, right? It's just it goes back to FinTwit, right? So many people say I'm bullish or I'm bearish at these prices, but it's about trading from one level to the next. It's never all that easy. But actually, with event contracts, which is I like them, especially when you come in off of a weekend like this weekend, and you come in and say, look at S&P. If I want to be bearish, click on this, and you can take the nose. I think the poll is saying right now, so it's basically $10 aside, roughly. It's 10.75 and 9.75. Everything pays out $20. So if you take the no, you're short. All it's got to do is close one tick below it. If you like the yes, you buy it. All it's got to do is close one tick above it. Actually, the no doesn't have to close one tick below because the no actually is the ties go to the nose. And so I like all of the no's today in the equities. I like the no's in the S&P at the money is 4,000. I'd like to see a little bit of a rally this morning, but I definitely this morning, to me, my top pick is going to be taking no's in S&P, probably no's in copper. I actually have some. Did I buy some copper this morning? I did a couple of trades this morning. Like I said, I'm not. Let's see, did I do it yet? No, I didn't do those. Actually, the ones I took. We're going to go to crude oil in a minute. I work some orders actually in copper. And actually, let's go to Nasdaq next because as we talk about S&P, that chart really mirrors that opposite of that dollar. Well, let's take a look at the Nasdaq because the Nasdaq to me is obviously so much weaker. Look how much further away it is from the 200-day moving average. No double top, a lot choppier type market. I would almost expect the S&P to be a lot weaker than the Nasdaq because the S&P is coming off of a key critical area, right? And it's definitely more of the market it's come back further. And the Nasdaq to me almost looks like it's going to be a chop shop. So my initial thoughts are probably stay away from Nasdaq, even though it's the weaker market. I always like to trade the weaker market. I think initially the reaction to the downside is going to be less, and I don't know what percentage wise the Nasdaq. So is it down 0.6, and then what's the S&P down 0.8%? That makes sense to me. I think the S&P is going to be the one you want to be short if you want to play short. I think the Nasdaq is going to be a two-way chop today. I don't like anything in the Nasdaq at all, so I'd probably stay away from that even in the event contracts. And then the other market that I want to look at is crude oil. Let's pull up CL. This market's breaking out, but I look at it and go, you know, it's it's put in quite a. If you go back and look right here, you had several of these lows right in here. You can see the line drawing across where it was. I was looking at it this morning, and I'm going, you know what? Kind of like this area to at least hold temporarily. Even if you go back and read what Shy Girl said about oil, it looks to start like if it starts to break down below 70, I think it's got some real issues. But I think initially today, it's one of those markets where I feel like I could step in and probably look to fade this move a little bit because this area does have some support from the past. So I actually, let's see if it should show them up here. But I actually, yes, I'm long some of the 74 yeses in CL because this is another thing that when I looked at, I saw this morning it was chopping around, and I said, look, I'll go to the event contracts because I could step in here and buy these and just kind of walk away. What the difference is what an event contract is, and a lot of people are saying, Anthony, why are you pushing these so hard? It's not that I'm pushing them; it's just another tool that we have. And obviously, we're gearing this show towards this. I think it's a great tool to add for new traders, for advanced traders, because it allows you to participate in the market and have actual skin in the game. And like I said, I like crude oil here, but I'm not going to go in and buy the outrights, right? Like today, I'll trade a lot more outrights in S&P short if I get some signals. So I like the nose in the S&P, but I also can trade the futures. Here, I wouldn't step in and trade this crude oil right here. The only way I would trade this would be an event contract, which before would be just using a weekly option, and now we just have a daily option. So I just like it for the day. I mean, that's the reason why I like these contracts. And so it's a simple way to go in and participate with it. And that's why I like the 74 yeses. I'm already long them. And then, like I said, quick recap. I like the S&P knows. I'm not in any of those yet. I will probably watch to see how the open goes. But like I said, one-dimensional possible move, I think, in S&P today. So I like bearish S&P. I think crude oil could stabilize and hold above 74. And then also going back to keep watching this news as I wrap up for today. Copper. And one more quick look. Shy Girl put this out in the blog. This news comes out. This is an easy way to participate by using the event contracts because instead of stepping in being just short, you pick a strike, you come over here, you take the no, boom. There you go. So that's what I'm looking at for this week. As we've got just a few minutes to the bell, or actually almost 10 minutes. Take your time today, everybody. Remember, as you ease your way back into a week, it's so important to get back in rhythm. Like I said, this morning I woke up feeling fresh, feeling rested, ready to go, but I've got to get my rhythm back. Go to the event contracts, trade some micros, take your time, and just find your way back into rhythm. If you enjoyed today's show, please hit that like button. I see a bunch of you in there. Remember, we're going to be on Monday through Friday from 9 to 9:30. Go to placeyourtrades.com to check out everything we've got going there. And of course, follow Place Your Trades on Twitter. You guys know I am at Anthony Crudele on Twitter. And once again, I hope all of you had a wonderful Thanksgiving. It's great to be back at the markets, but take your time and have a wonderful day. See you guys later.